Current price is $2.55 USD, but do not let that flat close fool you, because the pre-market data is already flashing a volatile $2.79, up 9.42% before the opening bell even rings. This is the exact moment where the amateur money gets separated from the institutional intent. If you are looking at yesterday's closing price of $2.55 and thinking nothing is happening, you are already behind the curve. The market is closed right now, but the order book is stacking up with a level of aggression that implies a significant gap-up open is imminent. This is not just a random fluctuation. A move of nearly 10% in the pre-market session on a Monday morning suggests that material news has leaked or is being digested by algorithms long before the retail crowd has had their first cup of coffee. You need to understand the structural setup here, because Datavault AI Inc., ticker DVLT, is currently sitting at a critical psychological and technical junction. The flat 0% change you see on the daily close is the calm before the storm, a deceptive stability that often precedes a violent breakout or a rug pull. And judging by the volume rushing in at the $2.79 level, the bias is currently heavily skewed to the upside. The expectation from the general retail public regarding Datavault AI is that this is just another buzzword-heavy microcap trying to ride the coattails of the artificial intelligence hype cycle. Most investors see AI and blockchain in the same business description and immediately categorize it as a vaporware pump and dump, likely dismissing it as a meme stock, especially given the company's unconventional history with digital token dividends. They expect a quick pop, followed by a slow bleed as the hype fades and the reality of balance sheets sets in. That is the safe, skeptical take, and usually it is the right one. However, the reality emerging from the transaction data and the specific nature of the news hitting the wires today challenges that entire thesis. The reality is that Datavault is moving away from theoretical tech into tangible industrial application. The pre-market surge to $2.79 is likely reacting to the validation of their Sumerian technology being applied to hard assets, specifically the digitization of mineral resources. We are seeing a transition from a company selling a story to a company potentially securing royalty streams from physical commodities like copper and gold. This creates a massive disconnect between the "it's a scam" expectation and the "it's a revenue-generating platform" reality. If the market wakes up to the fact that their tech is being used to track millions of dollars in mining assets, that $2.55 price tag will look artificially suppressed, and the short sellers who bet on the vaporware thesis are going to find themselves in a very dangerous liquidity trap. Let's examine the market mechanics driving this Monday morning action. The stock closed at $2.55, establishing a temporary floor, but the jump to $2.79 breaks a key short-term resistance level. When a stock gaps up this aggressively on news regarding revenue guidance or strategic partnerships, it forces short sellers to reevaluate their risk instantly. Remember, short sellers pay a fee to borrow shares, and in small-cap AI stocks, that cost to borrow can spike dramatically overnight. If you are short DVLT from $2.50, expecting it to go back to $1.50, and suddenly it opens at $2.80 with volume, you are underwater immediately. The panic covering from these trapped shorts acts as rocket fuel for the long side. This is why you see these exaggerated moves in the pre-market. It is not just buyers buying. It is sellers being forced to become buyers to close out losing positions. We are seeing early signs of a fail-to-deliver cycle clearing out, where market makers who sold stock they didn't have are now scrambling to locate shares to fulfill those orders. This creates a synthetic buy pressure that has nothing to do with the company's fundamentals and everything to do with market structure plumbing. Now, we need to address the elephant in the room, which is the short interest and the potential for a squeeze. Small-cap AI stocks like DVLT are prime hunting grounds for predatory short selling because the liquidity is often low enough that a well-timed sell order can crush the price. However, that low liquidity works both ways. If the float,
the number of shares actually available for trading, is locked up by insiders or long-term holders who believe in the new $200 million revenue guidance, then the supply of shares available to buy dries up. When good news hits, like the Tanzania mining deal, the demand spikes, but the supply isn't there. This supply-demand imbalance forces the price up vertically. You need to watch the volume in the first 30 minutes of the trading session. If DVLT opens at $2.79 and the volume is double or triple the average 10-day volume, it confirms that institutions are stepping in to defend the price, and the shorts are likely capitulating. On the flip side, if the stock gaps up and then immediately fades back down to $2.60 on low volume, it suggests the move was a head fake designed to trap retail traders into buying the top. Currently, the pre-market strength looks robust, but you must remain vigilant against the pop and drop pattern common in this sector. I want you to pause for a second and look at your own portfolio or watch list. Comment below if you are currently holding any AI small caps like DVLT, or if you think the sector is in a bubble. I want to know if you trade these pre-market gaps or if you wait for the dust to settle. Seriously, drop a comment because the psychology of the trader reading this is just as important as the stock itself. Are you chasing the green candle, or are you waiting for the pullback? Let's look closer at what Datavault AI actually does, because this context is vital for understanding why the stock is moving. They aren't just building chatbots. Datavault specializes in the intersection of data monetization and real-world asset tokenization. In plain English, they take physical things, real estate, diamonds, mineral rights, and create a digital twin on the blockchain that can be traded, tracked, and verified. The Sumerian patent you might see referenced in their filings is the core of this. It allows them to embed data into the asset itself. The reason the stock is reacting to mining news is that mining is a perfect use case for this. You have valuable assets in complex jurisdictions that need to be verified for the global market. If Datavault can become the standard for minting these resources into the digital economy, they take a cut of every transaction. This business model shifts them from a speculative tech play to a royalty company. Royalties appeal to investors because they are high margin and recurring. The recent news of raising their 2026 revenue guidance to over $200 million is a direct reflection of this pivot. Investors are starting to do the math. If they actually hit $200 million in revenue, a $2.55 stock price is absurdly low based on standard price-to-sales multiples for software companies. However, we have to look at the chart history to stay grounded. The stock has a 52-week high of $4.10 and a low of $0.25. This extreme range signals massive volatility. The run-up from $0.25 to the current levels was likely the first wave of discovery, where early adopters realized the company wasn't going bankrupt. Now we are in the consolidation and breakout phase. The price has been chopping around, building a base. The $3 level is the major fortress to breach. If the stock can push through $2.79 and hold above $3, it opens the door for a retest of the $4.10 highs. But, and this is a big but, there is likely a lot of overhead supply at the $3 to $3.50 range. These are investors who bought the top months ago and have been holding heavy bags ever since. As soon as the price gets back to their break-even point, they will look to sell and get their money back. This creates natural selling pressure that the bulls have to chew through. You need to see sustained volume to eat through those sell orders. In terms of actionable insight regarding the short sellers, here is what you need to look for. Check the borrow fee rate on your brokerage platform. If the cost to borrow DVLT shares starts spiking above 50% or 100% annually, it means shares are becoming scarce. Also, look for Regulation SHO threshold lists. If DVLT appears on this list, it means there are significant fails to deliver, implying that shorts are naked selling and may be forced by regulators to buy back shares within 13 days. This is a powerful catalyst that retail traders often ignore. Currently, the sentiment on social forums like Reddit and X is a mix of confusion and extreme bullishness. The apes are starting to circle this stock because of the high short interest and the tokenization narrative which appeals to the crypto-native crowd. When you combine an AI narrative with a crypto or tokenization narrative, you get a potent cocktail for viral stock movement. However, be careful of the echo chamber. Just because people on X are shouting $10 soon does not mean the market mechanics support that timeline. Macroeconomically, we also have to consider the environment for 2025. With interest rates likely stabilizing, capital is starting to rotate back into risk-on assets. Small-cap growth stocks are the biggest beneficiaries of this rotation. When money is cheap, investors are willing to bet on companies like Datavault that might not be profitable today but have exponential growth curves for tomorrow. Furthermore, the global push for supply chain transparency, driven by ESG mandates and geopolitical tension, makes Datavault's tracking technology more relevant. Governments and large corporations need to prove where their cobalt or copper comes from. Datavault